mining unit, mining rig than typically would be used by a consumer, but you could also put this aircraft sounding thing in your house if you wanted to. So we'll get to first an introduction, and then we'll start this up. It takes about 5 minutes to boot up, so we'll be explaining things, and everybody can just kind of come up when we're doing this part. We'll power it down and then go through some additional content. First, anybody, just to get a sense for the crowd, is anybody mining, or have they ever mined in the past? Okay, great. What kind of mining? ASIC, GPU, CPU?
CPU and GPU.
Okay, very cool. On a large scale, small scale?
It's a couple of kilowatts.
Okay, great, awesome. Perfect. How many people have bought cryptocurrency in the past? Okay, very cool. Okay, so without further ado, we're going to start with Mike.
Okay, guys, I'd just like to ask a question too. How many of you know what mining actually is, mining cryptocurrency? Okay, look around. Oh, I see one finger up. Okay, so what I like to do is kind of bring this back down to something relative that we can all understand, because even when you talk about mining cryptocurrency, I don't even know if mining is really the right word. So let's back up a couple of steps and see what we actually do with this type of hardware. I come from a banking background. I did about 20 years in banking, another 15 years in the casino industry. We don't need to talk about that. But it's really easy for me to talk about banking. What happens when you put your ATM card into or your debit card, or go to the grocery store. When you go to swipe that card and buy something, what happens? That transaction needs to be valid. Somebody else is trying to figure out where we're going to. It's called centralized. The banks have these massive server farms that are processing these transactions, millions of them a second worldwide, but that infrastructure needs to be up and running all the time to validate your transactions. You don't want to go to the gas station to buy gas and find out that your card doesn't work, right? So there's massive amounts of money already being spent. There's massive amounts of processing power already built to make that system work, okay? But one of the biggest problems you have with centralized processing is hacking, right? And if you read the news, it happens all the time. Everybody sees it. Companies are getting hacked left and right. Well, when you have centralized processing, if somebody wanted to attack your personal bank account, all you've got to do is break into the bank information. That's kind of bad. And that's kind of the birth of blockchain and of cryptocurrency, was let's find a way to make it so it can't be hacked. But the activity that miners go through is exactly the same. That transaction has to be validated, right? So instead of having a centralized processing center that can get hacked, we now all have servers. You can have one in your living room. When you hear this thing fire up, you probably say, no, I don't want this in my living room. But you can have your own computer, small or large or vast scale. But when all those computers are combined together, it gives you the processing power that's capable then of validating transactions on every single transaction. Now, that part, in my opinion, isn't really the mining part. That's just validating transactions. But it's a necessity to get blockchain to work, is to have those transactions validated over and over and over again in real time. Okay? Now, for me to go out and spend money, or for you to go out and spend money to actually buy a server to be online, there's got to be an incentive for that, right? And there is. When you're mining, or when you're validating transactions, at the same time you're doing the actual mining aspect, which is attempting, your hardware is, you aren't, but your hardware is attempting to solve a very complex mathematical equation. One that you wouldn't be able to do by hand. You actually need a computer to do it. But in attempting to solve this massive mathematical equation, if you're the first person or part of a pool of people that are the first to solve that mathematical equation, you're rewarded with Bitcoin. Okay? And that reward is what is the incentive for you to actually own hardware and try to solve as many of those complex mathematical equations as you can. A block is solved about every 10 minutes. So about every 10 minutes, you've got 12.5 Bitcoin that are rewarded to the pool of people that are processing these transactions. 12.5 Bitcoin. What's Bitcoin trade for today?
$6,500.
$6,500. How would you like $6,500 12.5 times today for simply processing transactions with a piece of hardware that you bought and is parked someplace that you don't have to touch? So validating transactions is the big aspect. To get you to spend money on validating transactions, there's got to be the reward. The reward is solving that massive mathematical equation, or being part of a pool of people that solve that mathematical equation. Then your reward is that Bitcoin and transaction fees that go along with it. So what Crambu has done is, I can show you some videos later, but we started where most people do. If you get to, you can advance that like 5 slides. If you get to the point where you say, well, I really want to build my own, and I've done it, and others have done it as well. You can go a couple more. You end up having to become very, very savvy in building hardware. And not a lot of people do, but this configuration right here would actually work. But it's not scalable. I mean, no offense to it, we call them garage miners. You can call me a garage miner. It's not supposed to be an offensive term, but you can go build a mining operation yourself, but you have to be pretty savvy, and you have to be able to troubleshoot that. Sometimes every single day, to make sure that this thing continues to run so you're online so you can solve that mathematical equation and make money. What Crambu has done is gone from this stage into enterprise level rack mount servers, and we can come up and take a look at it. We'll actually light this thing up so you guys can hear it run and feel the heat that comes out of it. But we've gone to an enterprise level, because as blockchain grows, so does the need for more and more processors, more and more servers, more processing power. And then that gets done on a larger and larger scale. So I've got some business cards up here. I'd be more than happy to hand you guys. You'll want to check out our website. We've got some renderings of some massive mining farms that we're building in northern Idaho, Montana, and here in Washington. Pretty big events, but we're taking this to a more enterprise level. We do have servers all the way down to, I think I gave you price points of around $3,000 for a small server that you might consider putting in your garage. It's still going to be a little bit noisy, a little bit on the heavy heat side, but we have servers all the way down to 1 unit, and this unit that we're showing you today, if it were fully loaded with 19 GPUs, with the best GPUs on the market, you're probably talking $22,000 for just one server. But the processing power is what you're buying, and that processing power is what gives you the ability to solve more of those complex mathematical equations and earn more money from it. Question?
So are you guys just focused on Bitcoin, or are you doing Ethereum and other?
We are GPU mining, have since day one. If we go back and look at the history of the company, if you want to Google Travis Jank, J-A-N-K, he's on our website, crambu.com. But Travis has been mining since '09, right out of Coeur d'Alene, Idaho. What was it, '09, 10, and 11, he actually had the largest privately held and operated Bitcoin mining operation in the world. He was a pretty big guy, physically and
10, 11, and 12.
10, 11, and 12. So we've been in the space for a long time, and that's where Travis did start, was with Bitcoin mining, and then found that it was much easier on the GPU side because you have more diversity. If you're ASIC mining, your hardware that you buy mines one coin. So if you want to Bitmain S9, that S9 is going to mine Bitcoin, and that's it. With a GPU miner, all you do is redirect, and you can mine thousands of coin with this same hardware. But we specialize in GPU, although within the next 6 months you'll see the same configuration that is loaded up with ASIC cards, and then even FPGA cards if you want to go down that path. But right now, primarily, we are GPU mining, and we're kind of pointed, the most profitable coin out there right now is Ethereum, so that's where all of our mining efforts are going, is Ethereum. Yes?
With the price of Bitcoin at, call it 6,500, what would you estimate the production cost of the incremental Bitcoin today?
If you go to Bitmain right now today, it's not real favorable news. I think they're actually showing in the red if you were to buy one of their miners. So profitability today, even on GPU mining, is, I mean, it's a rough market right now. The valuations are down, difficulty factors are up. My opinion on this whole industry and this whole market isn't the valuation of coins today, it's the valuations of where we all think it's going to be 2, 3, 5 years from now. So you know, it's like mining gold before gold hit 1,600, but you know you're mining it at maybe even a break even, but you're mining it knowing that that value is going to take off and go.
But you really don't know.
No, you're absolutely right. None of us do. Just like a stock, nobody knows where the stock's going to go. All we do, and all you could do to educate yourself, is just get into blockchain. I'm not going to sit here and try to prop up any coin or any one coin or sell a coin, because I'm just like you. I have no idea where those valuations are going to go. They could be completely inflated. No one really knows. What we do know, though, is if you stay real close to the news, is blockchain is real. I read an article, it's been almost 2 weeks ago now, that IBM actually has 1,500 employees that are dedicated solely to developing blockchain technology. So I think that's a different session, but blockchain is real and everybody wants to be on blockchain. In the 9 years that blockchain has been in existence, it has not been hacked. It can't be hacked. Whether you're Boeing or JP Morgan, we've been approached by both to build blockchain solutions for them. They want to be in blockchain because their data just can't be hacked. So the value isn't so much in the valuation of the coins, the value is in processing power and who's going to want that processing power down the road.
Yeah, but I think what's definitely true is that just like in the early days of the dot-com era, right, everybody said it was completely crazy, that it's not going to, we're not going to buy dog food online. It's just not going to happen. And what proved out is the biggest companies in the economy now are the ones who completely went against the common belief at the time that this was going to become what it was going to become.
I'm not suggesting that it's not for real.
Right. No. But I mean, I guess to me, the reason I bring that up is, to me, it feels like very early days in the second wave of what's happening on blockchain and cryptocurrency. And everybody does have their own different beliefs, but to me, you know, at $250 billion, it's still a tiny asset class relative to what this is going to grow up into over time. Because of the sheer fact that you don't, you know, it's like we're not all walking down the street utilizing coins beyond buying them and holding on to them at this stage in the game. So all of that kind of open to the public adoption hasn't yet happened.
Yeah. Just stay with this for one more moment.
Sure.
No, you're fine.
No, please.
You're saying that the cost to produce a Bitcoin is not favorable right now. It's unprofitable to do so. But if I heard you before, you said it is profitable to produce Ethereum. And I'm curious, why is Ethereum profitable to produce today where other coins are not? What's the
two factors come into play when you're looking at profitability of mining a coin or doing processing for a specific coin, and it's difficulty factor and of course the valuation of the coin itself. So difficulty factor is just as elusive as the valuation of the coin. Difficulty factor, relate it back to mining gold. So you had one guy walking down a creek bed in San Francisco and he found a nugget of gold. There was just one guy. And then he found two, and then he found three, and then he ran down to the local store and said, look what I found. What was in that creek bed the next day?
500 people.
500 people. The difficulty factor for that guy to walk down the stream and find those nuggets, just the difficulty factor went up, right? Same thing happens here. The valuation of a coin goes up, like last November, December, even parts of January, it was still like, you've got to be kidding me, the valuation is crazy. Everybody and their brother and sister wanted to get into mining. So everybody's buying hardware to get into the mining arena, right? Because the valuation is so high and I'm going to make a whole bunch of money. Well, now there's all this processing power out there. That's called difficulty factor. So as maybe you were mining, and let's just throw a number out there, say you were mining 1 coin a day. Okay, that was, you had enough processing power to mining 1 coin a day, and your difficulty factor is set here. And now the valuation of the coin goes through the roof, and now there's more miners within the next 2, 3, 5 weeks. You've got miners coming out of the woodwork, and the difficulty factor goes way up here. Where you were mining 1 coin, now you're mining a half of a coin. Okay, but the value went up, so you're still okay. You're going, well, the valuation went up, so even though I'm only mining a half a coin, I'm still making just as much money. Well, then what happened is the valuation kind of came back and reset. Okay, now the valuation of Ethereum today is down at 185, we'll say, 190. Okay, we're up at 205 today. Changes that fast. But the valuation of the coin's down. The difficulty factor stayed up because everybody already spent their money on mining equipment, and they don't want to unplug it. They want to mine. So I want some coin, and I'm still covering my power bill, so why not continue to mine? We looked at numbers on a smaller unit, about a $3,000 unit on this on the way over, and a $3,000 unit, and it was making something about $750 a year after power consumption. Okay, so you could look at that and say, well, wait a minute, why would I spend $3,000 on something that's only making me $750 a year? And you're offsetting your expense to run, so it's still profitable, you're still in the black, but you're looking down the road and saying, is Ethereum really going to stay at 185 or 205? Or is it going to go back to the all-time high of 1,400? Or is it going to hit 2,000? Or is it going to hit 5,000? That's a personal decision. And sometimes that, not sometimes, that would always come into your decision-making process. What do I think the future value of that coin is going to be? Do I think blockchain is going all the way? Do I think Ethereum is really one of the mainstays of blockchain? And is that where I want my money? Or do I want to take my coin that I'm mining in Ethereum and drop it into a different coin and trade? But it is speculative, it's mining. You're spending money on hardware. If your hardware cash flows today and you believe that blockchain's going where a lot of us believe it's going, if you're breaking even today, it's a good day. With the valuation all the way down at 205.
But I guess also to shape the conversation on profitability, it's not unprofitable necessarily at 6,500. The example he's giving is around Bitmain. If you're buying an Antminer, they're trying to maximize the price they can sell their hardware at, right, close to the ceiling, and it isn't necessarily that their cost of goods are what they're selling at. They're selling at trying to maximize that gross margin. So at current pricing, and there's been a lot of different analyses that show like the market would run into serious trouble at $3,800 as a floor, for example, on the Bitcoin side. But you know, there are people making a tremendous amount of money in today's market still. It's just a matter of where does all this go? And back to the example of the gold, you know, the human perception of a precious metal that isn't that useful in industrial applications did drive up the price of gold over time, and arguably the utility contained within the computer science model of blockchain has tremendous value and likely becomes a lot more useful over time.
We can debate this offline. The long-term trend of being an investor in gold or silver or any other precious metal or commodity, it sucks.
No, agreed. Yeah, agreed.
Take away the notion of virtual currency and all these other, which are new terms to a lot of people, and I'm not trying to take away, again, because I try to divorce that from the underlying blockchain technology. To hear the conversation about it and the amount of capital pouring in, and seeing the way returns have or the way profit margins are so different than any other commodity.
Well, here's the future that Crambu sees, and we've actually filed patent on what we call marketplace. So I can show you a dashboard when you guys come up to take a look at the hardware. Our developer, one of our partners, actually developed a dashboard where you can go in and see what your mining operation is right on your smartphone or on your desktop. Download the app, go to Crambu, at either one of the app stores. You can download our app and you'll see for yourself. But inside of the dashboard, you have the ability to toggle to different coins. So I'm mining Ethereum today and I change my mind and say I want to mine Monero, I'll mine Monero tomorrow. The very near future in marketplace is you'll end up seeing JP Morgan or Boeing or some scientific research company, and you'll be able to toggle down and say, well, I want my process, it's not so much mining at that stage, is I want my processing power to go towards that company because they're paying more than what I'm earning from mining Ethereum today. So it becomes an open marketplace. People need processing power, whether it's scientific research or medical research, or JP Morgan needs some more processing power that they can't build themselves. Remember, JP Morgan is not going to go out and build a centralized processing center to get into blockchain. That's not how it works. Because then what are they? That's exactly what they have today, and they're constantly under attack. What they want is a decentralized network, and that's what blockchain is. So if you own a lot of processing power in the very near future, it really doesn't matter what the value of Ethereum does. If it crashes, if it goes through the roof, there still is going to be massive amounts of company that need processing power for their own blockchain, okay? JP Morgan will have their own blockchain. IBM will have their own blockchain. You personally will probably have your own blockchain at one point. That's part of our vision of marketplace, is each individual user that wants all of their personal data secure, it would be to secure it on blockchain for, you know, maybe $20 a month. You've got your own private blockchain. All of your information being held secure that nobody can get a hold of, be it your financial information, your portfolio, your medical history, everything contained on your own private blockchain. But you don't have to go out and buy hardware to have a blockchain. You would just be in the marketplace and say, hey, I'm willing to spend $20 a month to get the processing power to keep all my data, all my personal information, personal and unhackable.
Blockchain as a service?
What's that?
Blockchain as a service.
Blockchain as a service.
Yeah.
Yes.
But Matt, that was all, I mean, just that entire conversation around utility, that's kind of the point I'm making. Between a worthless precious metal, right? Like at the end of the day, humans believe it's valuable, right? But there's not a tremendous amount of utility in it. And the same way with what's happening on the cryptocurrency side, I think all of the useful utility is down the road. So that to me has that similar metaphor of growth, where right now maybe things got a little bit hot and a little bit exciting early before the utility emerged, but I think there is just a lot of good times ahead across a lot of different types of coins, simply because of the description he just gave. As things continue to move over from centralized to decentralized infrastructure, companies pay for that, and they need that underlying utility, and in theory that I think does drive a lot of value in this particular market. So
that's kind of why Bamboo chose to use GPUs for that application, actually. But one thing that Mike didn't touch on is mining is actually profitable in a down market as well. If you bought a coin at 10,000 and it goes to 6, you lost 4,000 each coin you bought. Well, in mining, you're actually gaining a reward, if you will, on a daily basis, every minute, every second. So there's a couple different ways to look at it as far as buying and holding and mining, and we can go into that discussion as well. But we've kind of revolutionized the world when it comes to the mining aspect of things, and I know Mike and I'd love to show you a little more about it, maybe one-on-one later on. So. Can
you guys comment just on the treasury management function that you guys provide? So obviously, as you point out, you can work across a lot of different coins with GPU, but are you making recommendations via notifications and software for the folks that are managing them? Obviously, the ones you manage directly, you can run for them.
As an OEM, we have to be very careful with what we actually advise on.
Sure.
Because what Crambu does in selling hardware, we already look like a passive income,
sure,
which makes a security, and now you've got issue. We have inside of our dashboard that I mentioned, we actually have a news feed. So we're drawing on thousands of sources on the internet, bringing it into one news feed, and it's all crypto. There's no cookie recipes, no casserole recipes. It's all crypto.
Sure.
So we look at that as the starting point of keeping people in the loop. If you want something really consistent, 3 to 4 times a day, I would absolutely go to CCN, not to be confused with CNN, but CCN, Cryptocurrency News, and just read one of their articles, and you'll get a pop-up that says, do you want notifications from CCN? Just say yes, and you'll get 3 or 4 stories a day, and it will keep you in tune, positive and negative information on what's going on in the crypto space. Crambu will, at one point, bring on additional coins into our platform. That in itself would tell you that we've done our due diligence. We're not going to bring a trash coin on to the marketplace and say, here, go mine this coin. So that in itself is kind of some advice on, hey, here's something we're doing. But we've gone down the path where do we put together, let's say, a mutual fund type button where I just push one button and now I'm doing 10% Ethereum, 20% Monero, and so we have the ability to do those things. It's just, can we do it without getting in regulatory.
Right, but let's say that somebody did buy a handful of these units. Would they control what they're mining from the application here?
Yes,
like
exactly.
They would say, instead of Ethereum, I want to mine Monero, for example.
Each
and they
individual server has, each individual server, you have a control panel to it, and you can say, I want to reboot it.
Right.
And you can actually shut your whole entire GPU down that's sitting in our warehouse. You can shut it down and restart it. Say, well, I want to mine Monero with it today. I want to mine, and I want to take this one specific, or maybe 2 of my servers and mine Monero. I'm going to take the other 3 and mine Ethereum. But you have the ability to do that right at your fingertips, the ability to control your own GPU.
And this also kind of segues into the next session, which gets into trading, right? So the most successful operations, of course, they're doing origination, and then once they originate, then they're trading into different currencies, and then it becomes, the winner of the trading game, so to speak, because it's a pretty active market, and obviously there's a lot of correlation around the 800-pound gorilla right now because it's not as high volume as other markets are, but those things are changing over time as well.
Right. So. Yeah, Bitcoin really holds that whole realm and kind of controls the market as it fluctuates. But as you mine, as you maybe hold coins or decide to start trading strategies, that you can get into profitability, or and it's volatile, so you can use money as well. Yeah.
So guys, why don't we all come up here and we'll fire this up so you can kind of see. It takes about 5 minutes, so feel free to come up and we can explain things, but it's interesting to see like a true commercial in here also, because it's pretty exciting. Yeah, sure. Yeah, and careful the Ethernet there. Hey, good to see you.
Good to see you.
How you been? Yeah, we need to have a coffee or beer sometime.
That would be cool.
Yeah, yeah. Do you still have your kids helping with the mining operation?
Yeah, you know,
Awesome.
we actually shut it down a couple of months ago.
Oh, you did?
Yeah, July got really busy. We were gone a bunch.
Sure.
And, you know, the price of we were mining Monero
Right.
plummeted.
Right. Time to switch gears.
They kind of lost interest, and so it was me that was keeping it up. But
Yeah, and you're like, no,
I've
got a job. I'm really busy. And,
Right.
Yeah. Yeah, come over and check this thing out. Thing's pretty awesome, man.
yeah, I want one.
I know, exactly.
These all fluctuate too. There's so many different types of
You have the
cards.
screen up? Yeah, you do have the screen up.
So many different types of cards that we can actually put in here as well too. Different processing power, different hash rate, different power consumption. There's a lot that goes on in here. This is all for future. We try to build Sept. Eliminate all these wires. We have a purple color PCI right here. All the wires.
Yeah, isn't it? It's awesome. And I remember you were doing CPU stuff, and then you some like
GPUs. GPUs up too.
Oh, okay, gotcha. What did you end up picking? NVIDIAs or AMDs or what?
So we had a bunch of NVIDIA cards
Yeah,
in our various gaming rigs, and we got those going, and I got a
Nice.
couple of AMDs going.
Yeah.
You know, for a living shop. So you
So you're
know,
doing all headless Ubuntu basically for running it for the most part. Yeah, that's cool.
taught the kids how to use SSH and TMUX and so on.
Nice.
Right?
That's pretty cool.
More of a learning experience.
That's great for them though. I mean, I just think that's the best thing you could do for a kid, you know, with where the future's going. It's like, because they don't know any better. Like, you just get them native on the command line, like, why not, you know? And then they run into it later. They're like, oh, that's easy. I got that. I mean,
And then the networking piece too, right? This guy is not checking in anymore. What's going on? And so I love seeing them actually go, oh, okay, the network
Yeah.
switched their power came unplugged.
and they're problem solving.
It's stable, you know?
It's super cool. Yeah. Yeah, this thing is cool.
So you ran the kids this summer, right?
I did, yeah, it went great.
How'd that go?
It was great. You know, so it was 10 kids. We, 10 kids for 10 weeks, basically. And I think it's the birth of what would be a really good program, because it's just this whole field of applied learning, right? Like, we can go sit through a workshop and promptly forget whatever happened during that workshop, right? About anything, about, you know, how to build a product or how to run product or how to bring a product to market. And so this was take high school kids and throw them into the cauldron where they walk in and they're like, well, if we're going to use Git, can I use Git Tower? No, it's command line. and you know, and it was like React, command line, Postgres, like,
Oh, cool.
you know,
How'd the high school kids do?
code. Oh, they did great. Yeah, because it's the same thing. It's like they just don't.
And I'm like, they're a little young to be really.
No, I mean, a couple of them would complain every now and then, and I was like, Vitalik Buterin, Okay, so hopefully the loud but exciting demo was fun for you guys. So we're just going to go through probably about another 10 minutes of content, and then we'll go through Q&A at the very end as well. So he was mentioning ASICs, so I just wanted to see you guys to see what the ASIC miners look like, and so he was mentioning like ant miners. So this is obviously a data center, so each one of these can be, you know, $5,000 to about $13,000 for them. They're highly specialized. They aren't nearly as exciting as what Travis can do in terms of like overclocking and modding and doing everything else, because literally you kind of just plug it into the wall and then you Ethernet, and that's back to your equation, am I making money or am I not? There's just not a lot that you can do other than you just keep doing it. And then if the power cost relative to your income went below a certain mark, you would just have to stop. And so what's really interesting about this, there's some people in the room working on some really cool stuff related to a different application of GPUs on the AI side. So there is a lot of utility that still comes out of GPUs down the road. So if someone's thinking about what to do on the mining side, for some of the lines of work that I'm in, it's also really interesting to me that there's applications around machine learning and AI as well. And so this is what, these are kind of super specialized machines. This is what the rest of us might buy if we were like assembling the garage mechanism he's talking about here. But you can buy, not quite things like this, but yeah, you can buy nearly things like this at Best Buy, exactly. And then CPU mining, literally all of you could put something on your computer that's going to not make you any money, but it's kind of interesting and exciting to do the CPU mining, right? Because stuff kind of moves around in your computer and you realize like it's doing, you know, mining activities, but yeah, you're not going to make any money. And then there's a handful of different algorithms that are utilized, and we don't need to get into what these actual algorithms are, other than you have some decisions to make when you're doing your mining. So on the GPU side, you can go to websites like What to Mine. If you saw when the screen came up here, each one of those cards have a computed hash rate, and so what you could do if you know what your hash rate is you would just plug it in and then consider using different algorithms which correspond to different coins. And so you do have a lot of different abilities to decide based on profitability, current competition, how many other people are trying to mine, and is there some new useful utility for a particular coin that might be driving up the prices over time, but the market hasn't yet adapted. Now, the challenging part is humans have gotten hyper-competitive on this planet, so the competitive level, there are so many people chasing that the prices do tend to, if there is a little gap or anomaly, it tends to get filled pretty quickly for the little guy. But you know, just listening to your numbers too, like let's say if I did spend $3,000 and I recovered my investment in that hardware and I was making $750 a year, I'm actually would be terribly happy about that, as would an investor just looking at it on a percentage basis. Now there's no guarantee on that return, but you know, I just think of all the money I've spent over the year on an enormous amount of hardware, just being a geek executive software guy, none of that stuff ever made me any money, right? It just obsoleted. It eventually got pushed to someone else who thought it was an exciting piece of hardware. But you know, this is it is a new era of software. And what I wanted people to see, this is going to be hard for you to see, but the garage side of it, this is just headless Ubuntu that's running, you know, 4 cards that you can. Let me start this. It's running 4 cards. 4 NVIDIA cards that you can buy at Best Buy for about $400 each, so a rig that costs roughly about $3,000. But this is what mining actually looks like at the command line. So this is Ubuntu, it's headless. You know, I've issued a command at command line, and then it goes through the whole process of synchronizing with the existing blockchain depending upon what you're mining. And you're starting to see speeds register here, just like you may not have seen it because it got a little bit loud here, but it's going from a 0 mega hash rate to 67, and you can see each one of these cards coming in. Depending upon your software, you might also be mining more than one, like you could be mining Sia coin at the same time that you're mining Ethereum. And he is right that it is not necessarily for the faint of heart running these things. So like if you're totally comfortable running Linux machines and you're a system administrator, this, I don't want to say it's trivial, it still is a pretty significant learning curve to kind of piece everything together properly, but if you're just for the first time realizing that sitting behind your computer there is even a command line, it's going to be pretty challenging for you to do it. But for those of us who like those kind of things, it's super fun. If anybody is actually interested in doing this, on my GitHub I've got a pretty thorough write-up of how you, can, just running, of how you can configure a headless Ubuntu rig and reliably run it for long periods of time. So like it'll just run for months at a time. It can sit in your basement. He is also right, it does make noise. It doesn't make as much noise as this. And also another key thing to point out, Travis, their CEO, is a master in overclocking. So the more you overclock, it does make more and more noise. You know, it's just, generates more heat. And you do get more out of it. And in the hyper competitive world of crypto mining, that can be pretty valuable. So what this is doing on, this is using something called Biobu, which lets you do essentially kind of tabs in your command line. So you have to both actively be engaged in downloading the blockchain at the same time that you're doing the mining. So you end up having multiple kind of virtual tabs, so to speak, and you're able to manage a rig that way. And so that's what's happening now. And so it's just importing the new chain segment. The other key thing is if you are doing this, you would also want to have some skills in information security, because if you just use Xfinity and you never changed your password on the router, it's really easy because everybody uses the same router, so you're relatively easy to hack. And then the unique nature of the strings that are used for your addresses are pretty easy to find, for a hacker. So again, there's somewhat of a high bar, but you want to make sure that you're taking care of all these things. And if you are doing the treasury trading, you're absolutely right. The cryptography has never been cracked on cryptocurrency, but things like exchanges have been, because they're fallible humans who are running them doing stupid things. And so let's say that you were doing the currency and you were doing the trading, you wouldn't want a bunch of coins sitting on an exchange. You'd want to take them offline in a hard wallet when you're not trading them. So those are all just kind of general best practices. You'd always want to be hardening your systems. Obviously use strong passwords. So there's a lot of things starting to happen in our area related to blockchain. This is as good of a decentralized location as anywhere else in the world, and so we're doing a lot to kind of attract companies and help companies that are building in the space. So there is a blockchain conference October 24th and 25th just downtown. It's over at the Masonic Temple, and hundreds of people, some great companies, great speakers, sponsors, and we plan to be running these every year, and I think that covers it. There is also going to be, related to Decentralized College, a mastermind. If you guys have never done a mastermind, I highly recommend it, but it's a small group of people who meet on a committed basis. There's a structured curriculum. You can go a lot deeper into it than you can, of course, with a 1-hour intro on each one of these topics. And I think we're good on time.
We're good on time.
And that is the end. So any questions or ideas, or Luke?
What about obsolescence? So as you buy these machines and then a year later, the next generation of GPUs can be double, how does that affect your machine when you bought them?
I mean, for the most part, you're ideally getting your ROI on your hardware, and then you're adding additional hardware as you go. I mean, the weird thing is, to make a new ASIC is something in the neighborhood of like $25 million. To make a new GPU is really, really expensive, and so there's really only 2 companies in the world that are currently making them. And so the obsolescence isn't as dramatic as, next year my 1070 cards are, obsolete. But yeah, at least yet, things could shift and become a little bit more rapid on the equivalent of Moore's Law for GPUs, but it, just hasn't happened yet.
Scott, in sort of layman's terms, what are the trade-offs between mining
in the GPU versus an ASIC versus an FPGA?
So I'll let these guys speak on the FPGA side because there's very few people successfully doing FPGA. But the trade-offs really, as an individual that might be thinking about it on the investment side, is you're going to pay a lot more for hardware generally on the ASIC side, and then you're going to have a lot less ability to configure and make changes. And ultimately, if Bitcoin mining became unprofitable, you now have a really expensive paperweight because that ASIC is purpose-built to mine Bitcoin. On the GPU side, you have all these kind of different applications, some of which could include AI farms that, you know, could be tied to a coin, but it could also not be tied to a coin, and it could just provide utility to the software or service company that requires that GPU. And I think, you know, for the geek in us who likes to be able to, you know, this is just more exciting at that level. So not the investor side, but if you are just more of a compute software hardware person, like I really enjoy doing this kind of stuff. And it's because you have a lot of knobs, you have a lot of things that you can change in terms of configurations, and you can automate a lot of things via software. You know, it just ends up becoming a little bit more exciting. And then all I do is I'm then doing treasury stuff in the background, where if I think something else is more valuable, or if I want to be in Bitcoin, I just kind of move things around in that way. But I also like the fact that I don't think Bitcoin mining is going away at all, but I like that in the back of my mind that I have a protective measure that I could redeploy if I went down the road of GPUs. And those are just going to continue to grow in application and utility, everything. You know, it's just orders of magnitude over traditional processor, depending upon what kind of compute problems you're trying to solve.
Yeah. The way we look at it, Matt, is when a coin first comes out, there's forks, and that algorithm could change. So GPU mining is far superior in that element. Not only just for one specific coin, but like I said, over 1,000 coins you can mine with GPU. FPGA, you can actually go in and reprogram an FPGA card. So you wouldn't really want, and that could cost you $10,000, $20,000, $30,000 to pay a programmer to come in and recalibrate that card to actually be able to mine a different algorithm. So once a coin solidifies, and ASICs does this, they came out with a ASIC card for Ethereum, kind of disrupted the market a little bit. But once an algorithm matures, you can start drifting into saying, well, I can get more processing power out of an FPGA card. Now, one FPGA card, just put it in perspective, some of the numbers, preliminary numbers we're hearing is one of these cards here, if you went with a P102, you might get 50 mega hash out of a P102. Okay? Overclocking just a little bit, we'll call it 50 mega hash. Well, an FPGA card, using the same exact amount of wattage, 225 watts, you could get upwards of 1,900 mega hash if you were mining Ethereum. Now that card obviously is going to cost you more, but you're still probably going to get, even taking the cost into consideration, you're probably going to get 6 times the performance, 6 to 7 times the performance off of an FPGA card. So you would definitely, if you were dealing with an algorithm that you felt was solidified and wasn't going to change a lot, then moving from mining that coin using GPUs, you would move into FPGA.
What would be a ballpark price for that FPGA if you were to? For
a card?
Yeah.
You could buy an FPGA card for $3,500. Yeah. But you have, but it has
source code for say Ethereum, your FPGA.
What's that?
Yeah. You have to pay somebody to write the code, or
yes,
can you download code for it?
You have to pay someone to actually write the, you have to pay a programmer to actually.
But there's not open source.
There is open source, but I mean, we've got some guys that are working on it right now, and it's, you know, we'll probably spend close to $30,000 to bring them a narrow solution with an FPGA card. So
who are the vendors in that space? Like who makes the FPGA card that you're describing?
They do. FPGA. There's a few people around, actually right here in Coeur d'Alene, that were engineers for them. A couple different companies actually fell apart recently, and we were able to kind of poach these guys, and they with our configuration and everything, they feel that we can have Monero, Ethereum, and Zcash programmed within like 60 days. But the problem with these are when they fork. That's the problem with these. You have to reprogram. You have to reprogram that every time it actually forks. So that might be a little bit of downtime. but you're actually having 38% more processing power to where you're actually not worried about that downtime.
Right.
So that are going to actually change their algorithm. How does that work if you're trying to implement? You know, they actually have a plan changing their algorithm periodically now, right?
Everywhere.
I think you're reinvesting, you're writing a bunch of new code, I think is the answer. But yeah, that's part of
And when they do that,
solving,
we have to program it.
Yeah.
What we built in all of our chassis was the ability to go from GPU mining to FPGA mining to ASIC mining out of the same configuration. Simply just going in and changing out cards. I think one of the questions earlier was, well, what's my longevity of GPU? What's my longevity of that hardware right there? Well, that hardware could be 10 to 15 years. The GPU might be
Thanks, guys.
2 to 3. If you're in an AMD product, it might be 1 to 2 years before that, you know, that card's just toasted.
Yeah.
And you want to replace it.
And to be good stewards of your time.
Those cards inside of that chassis makes the chassis very good.
Yeah. We're at 1 o'clock if we're here to answer more questions, and feel free to, but definitely thank you all for coming today. And we'll just keep going, but I just wanted to let you guys know it is 1 o'clock. So, yeah. Yeah, exactly. That's the point.
Because I want to.
The presentation is formally over, but yeah.
Thanks, guys.
Yeah, absolutely. Thank you. Yep.
Got a little warning.
Good seeing you. Yeah, and like I said, if you want to do a coffee or whatever, let's do that sometime. But I am coming over next week to see those guys too. So, Friday.